I recently had the pleasure of speaking with Fabrizio Alessandro, who is the trader behind Darwin FFG. What follows is the recording of that interview where Fabrizio provides some fascinating insights into the way he trades and dives into the detail of his two main strategies. He talks through the process he follows in his trend following continuation strategy and also his contrarian mean reversion strategy. And importantly, explains how he switches from one to the other dependent on how the markets are behaving. Fabrizio has only been with Darwinex for a relatively short time, since the middle of 2023, but already the performance of his Darwin has meant he's been successful in attracting over 4 million USD of investor capital. And on top of this, he's also managed to accumulate 650,000 of seed capital from DarwinIA. So this is a really great opportunity to gain some valuable insights from a successful trader. I hope you get as much from it as I did. Thank you, Fabrizio, for taking the time out of your busy schedule to speak with me today, and welcome.
Good morning, Martin. It's actually my pleasure. Well, thank you very much for giving me this opportunity to speak about what we have been doing with Darwinex in the past few months, because it's been a great experience so far.
Well, it's great to have you on, and it's great to talk about the success stories that have come about through Darwinex, so thank you. As I said in my introduction, you've only been trading with Darwinex now since the middle of 2023, but I noticed that you did also migrate about 8 months of track record into the platform at that time, so you currently have a total of 18 months of track record showing. Throughout that time, you've remained profitable with relatively small drawdowns, and given that it's quite rare for new traders to start off quite so impressively, I'm guessing that you must have been trading before this for a while.
Yes, precisely. I can say that my trading career started around 2016, because I was a financial advisor. I used to work for an Italian bank, but I was basically a salesman of financial products, and I didn't particularly like the job. And through a friend of mine, I discovered the world of online trading, and I was immediately fascinated, and I started working with him. We had a community, we provided various services, and it was around that time that I met my current colleagues, with whom I started working almost immediately to a project of setting up an academy built around MT4, MT5, and C-Trader instruments that we actually developed with the help of some programmers, because we were a group of traders, or in my case, aspiring traders, that were working at the development of instruments for MetaTrader that would help us in our trading activity, basically. So we managed to actually revolutionize the MT4 platform. We made it much more user-friendly, and we created more than 300 indicators, scripts, expert advisors, and we created what we call MQL Suite, which is an entire package that provides ready-to-use operational and analytical profiles that contain all the information that a trader needs to understand what the market is doing, and then to set up positions.
Obviously, you've put a huge amount of effort into that. So in the team, is it a blend of skills? Do you have complementary skills, or does everyone actually trade and use these, or are some people just there for support and for the development side of things?
Yeah, well, we had the creator of the indicators, the one that had the ideas for the indicators, and then the other members participated in various capacities. I'm the one that trade the most, that started trading the most out of the bunch. because I soon realized that I wanted to put myself in a position where I could count only on myself to take care of my needs. I mean, life is uncertain. All of us have experience of this. Maybe some of us more than others, but I knew that at a certain point, well, I could find myself alone, and I saw in trading the opportunity to be able to remain alone and still be able to take care of myself and have an activity to support myself and my life basically.
Yeah, to become self-sufficient effectively. Yeah.
Self-sufficient, exactly.
Okay, interesting. So how long ago did this happen? How long were you trading before you joined the Darwinex platform?
I think I have been trading for 4 or 5 years. 5 years, I'd say 5 years since 2017. 2017, yes. Five years, I would say 5 years and a half.
And how long do you think it was before you became profitable?
I think for the first 2 years, I was experimenting. But then I managed to set up my first profitable trading system. And I became a trader actually. So after a couple of years, when I said to myself, you need to be able to quantify what trading can actually give you. So I started to set for myself a monetary target for the week or the month. So let's see if applying the trading system, I can really make money consistently. So that at the end of the month, I have something to show for it. This was key actually, because many times we just hope that the market is going to pay us. And we open positions and we hope that those positions are going to produce incredible returns, but it's actually a system that can that puts you in a position of taking profits frequently that is going to make you a profitable trader. And so I set for myself an initial monetary target for the end of the month, and I had to break it down into the number of trades I needed, of how many pips, and with what kind of lot size, in order to have, let's say, at the end of the month, 2,000 euros. And so I quickly discovered that all I needed was 4 setups a day with 25 pips and a mini lot as a contract size. And I started looking exclusively for those kinds of setups. And so I took profit as soon as the market reached my personal target, my personal monetary target, without remaining there hoping that the market would pay me more. And it started working almost immediately. And in a matter of 2 weeks, I realized that my monetary target was conservative. I could do much more, and so I doubled it, and then I went from there. And this is what I have been doing for the past few years, and I have to say it's working.
Good, excellent. Okay, well, we'll get into a little bit more detail in a moment, I think, about the trading strategy that you tend to use. But before we do that, I've been looking at some of the metrics on the Darwinex platform that I can see for your Darwin FFG. And I can see that you managed to attract your first 1 million USD of investor capital relatively quickly on the platform. But then it really began to take off at the beginning of this year in January 24, where it's grown from 1 million to 5 million, almost 5 million in just 3 months. And I wondered what your take on that was in terms of why do you think that this rapid growth suddenly started on the Darwin?
Well, of course, in the beginning, we had to show for ourselves the track record that we imported, and that was already something that could catch the attention of many investors. But I figure people wanted to see if we could continue on that type of producing that type of performance. And I think that we reached the first million thanks to your support. I mean, we started immediately producing results, making good returns, consistent returns month after month. But I think it was your support. You gave us. I think you included us in an email that you sent out to investors. So to put a little bit of spotlight, we were and we are very thankful for that. And then I guess that it was being able to rank in high places month after month in the DarwinIA ranking that actually attracted more attention. The performances continued to be consistent. And then you referred to an acceleration at the beginning of the year because January was a very good month for our trading, because I should also mention that I'm not alone in the managing of this strategy. I have a partner, and we made nearly, I think, 7.8%. Because markets were really reactive. We saw pretty much recognizable patterns, both in forex and in indices. It was for me at least, it was an easy month to trade, and so we got into a particular category, the on fire category, that because you have various metrics that analyze our activity, and
filters. So we have a number of different filters, and one of those that shows rapid growth over the recent
rapid growth, exactly. And that definitely attracted the attention of many investors. And right now, because the investors are continuing to grow, to come on board, and I think this could be because in the past 2 months we have faced a couple of drawdowns, and so we were above 100% return on the strategy, and now we are a little below that, and so maybe
that's a good opportunity to maybe get into the
exactly, get into at a better price, basically a better valuation, a lower valuation of the strategy, in order to intercept the resuming of the climb.
That's really interesting, and I've got a sort of a follow-on question, really, something that interests me. Because you've seen this rapid growth in the capital that you've managed to attract, do you feel that has put any additional pressure on you? And in particular, has it maybe changed the way that you feel that you need to trade?
Yeah, I have to say we felt a little bit of pressure, because with more money following the strategy, of course, more responsibility comes. And we started being also under the spotlight for the company, because there's an up-and-coming strategy that is doing well, and so expectations are coming both from the company and from the investors. And so we realized that that we need to start doing things a little bit differently. Yeah, we have to resolve this current drawdown, and then we will probably, considering the amount of capital that we have under management right now, we will adjust the strategy in order to avoid altogether the production, even when we are certain about a certain position, even when we are confident that it's only a matter of time. well, we will try to avoid those kind of positions for the
Well, that's what trading is all about, isn't it? It's about, learning from different scenarios, making changes and adjustments, and basically improving for the future. And
Yeah, exactly. I mean, if this was my trading account, only my trading account, I wouldn't even be looking at the platform. I'd be there. I would add to it probably substantially. But seen as the other people's money is involved,
yeah.
of course, the level of attention and has to be absolutely greater.
Yeah,
Right.
that's a really good example, really, of how you have changed your style to accommodate that different environment. So thank you for that. I know that you're going to sort of share some charts with us in a moment, and we'll get a better idea of your trading strategy from that. But just before we do, obviously Darwinex has the DarwinIA program for seed capital. Can you tell us what your experience of this has been prior to attracting real third-party capital, and did that actually help you? Did it motivate you to carry on, and so on?
Yes, absolutely. I come from a place where I thought I would never get involved with management of other people's funds. I always my idea was to trade my own money, but I met you guys through my friend, my partner in this activity, and I mean, Darwinex is so very well structured. It's so very well organized that I saw a real opportunity to do this in a safe way, in a safe environment, both for me and the investors.
Thank you for that feedback, first of all. It's great to hear that.
Absolutely, no, absolutely. This is simply the truth. I wouldn't have done it if it wasn't with you, because as soon as you explained how the activity is structured, well, I realized immediately that there's nothing like it around. You're, really, I would say, a pioneer because you're giving a retail trader the opportunity to continue doing his activity, business as usual, and but at the same time, benefiting from the possibility to attract capital, which we don't have to manage directly. And we keep doing what we have been doing in our career, basically, without having to change anything in particular in our strategies and the like. And
It's a brilliant
also getting value for other people, because when you are good at doing something, well, the idea to have somebody else benefit from that is actually it's actually a great idea. It's actually an interesting endeavor, but the conditions have to be right in order to do that.
Yeah.
And you prepared the way for us retail traders to do precisely that.
Well, it's a great point, and thank you for that. And for those people listening who maybe aren't familiar with Darwinex, as Fabrizio stated there, the trader can just carry on doing what they always do in terms of trading, using their skills to trade the financial markets. Darwinex ourselves are the asset manager, so we take care of all of the legal aspects, the financial regulation, to make sure that everything is legal and above board. And so it just leaves the trader to do what they do best. So thank you for making that point, Fabrizio.
Of course, that's well deserved.
Thank you. So let's move on then and talk a little bit more about your trading strategy specifically. And feel free to share your screen here so that we can sort of
Okay.
see the charts that you're talking about. And I'm interested to find out a little bit about the technical analysis that you use that influences your strategies. And if you can just take us through the day-to-day operation of how you essentially make your trading decisions.
Yes, of course. Well, I actually studied a lot of things. I used to do Elliott waves. I used to do cycles. I familiarized myself with what the kids today call smart money concepts. Well, I looked at various analysis models, but then again, I was working on a daily basis with the indicators created by my group. And it was here that I found what actually works for me. I mentioned that I utilize particular operational grids, and this is one of them. For example, I use this one mainly for contrarian entries, and then there's another one based on a Fibonacci, a proprietary Fibonacci study that I use mostly for trend following setups. Well, what I usually monitor, since I am mostly a forex trader, is the performance of the currencies as a whole. Because as retail traders, sometimes we tend to trade financial instruments, currency pairs, specifically in isolation. When I trade, I always want to know a currency pair. I always want to know what the currency is doing as a whole. So I have this instrument that tells me on a daily basis in this case, but I can set it up to show different values. I want to know what the currencies are doing in terms of baskets. So, for example, today the New Zealand dollar and the Australian dollar are the strongest currencies. We're not seeing big movements, but we clearly have the New Zealand dollar, which is the best performer for the day, and the yen and the US dollar, which are the weakest currencies of the days. Of course, this represents a trend following opportunity. So if we go to New Zealand dollar, US dollar, well, it's clearly going up, plus 0.27%. And so this was actionable information. I mean, I have a strong currency, a weak currency. The balance of power between the two is skewed in favor of the New Zealand dollar. Well, on this currency pair today, we could look for a trend following entry. This is the reasoning behind it. And well, of course, the bigger the imbalance becomes between the two currencies considered as baskets, the closer we get to a retracement, of course. And that's the premise behind the contrarian entries. So, for example, I have another instrument I use in combination with this one, which tells me the average range of the financial instrument on a daily, weekly, and monthly basis. And it analyzes data, a year of data. So in the past year, of course, these numbers change over time. New Zealand dollar, US dollar makes on average 58 pips per day, 129 per week, and 272 per month. And so I see that today's range is 22 pips. We are far away from the average move. If the balance of power between the New Zealand dollar and the US dollar grows during the day, and New Zealand dollar, US dollar makes more than 58 pips, well, what we can call an excess starts to produce. And it's in those circumstances that I start to evaluate a contrarian entry, especially if the excess culminates around one of these percentage levels. One of the intuitions of one of my colleagues at MQL Suite was that institutional traders monitor net changes in the market. You rarely hear institutional investors, money managers talk about the market in terms of pips, in terms of points. They look at the net changes that the market produces. So the intuition was to translate net changes into horizontal levels based on a certain time horizon. So what you're looking at right now is an operational grid that is created by the instrument at the beginning of the week. The grid starts from the previous weekly close and from there it already calculates all the net changes, 0.5% net changes. So we have resistances and supports. These are prices, but they are particularly reactive because they're not just prices, but they are effectively net changes that the market produces. And if you look at the chart, both every minor and major swing point in the market happens exactly on these levels or around these levels. And we have these levels in advance. As soon as the new day starts, the new week, the new month, the new trimester, semester, and the new year. And so we have the ability to, combining these grids with the information provided by this indicator that relays average ranges, to have an idea of what the market could do. So the best trades that I'm able to take using these grids, combining the levels with the average ranges and the performances of the currency baskets, are those that present themselves after the excess in terms of range is already on, and when the market reaches one of these percentage levels that is in confluence with previous price structures. And well, I have to say that as soon as I set up the system, making money this way appeared to be at some point really too easy. It was a daily, well, I started off with 4 setups a day. I could find more, and they would pay me more than I would expect. And so I thought I found the perfect recipe. But of course, the market doesn't make it all that easy for anybody to make money. And so I learned at my expense that we need to avoid, markets that are involved in a specific situation that could create outsized movements that are unpredictable. And so I started avoiding exotic currency pairs. I started avoiding instruments like oil and even natural gas, silver, particularly because it's a very fast market and allows you to make money really quickly. But well, of course, it can also take that money from you really quickly as well.
Yeah. I think every trader's been there, haven't they? Basically, when things are going well, you can fall into a trap of feeling that you're unbeatable. And then the market has this habit of bringing you very much down to earth when things turn against you.
Yeah, I think I went for this was right after my system was already consolidated. I'd started making money for a while. I think I went for 8-9 months without losing a dime. I could always manage every drawdown. I never lost a dime, and that led me to that feeling you were talking about of invincibility, and that was really wrong, because when you feel unbeatable, you're bound to underestimate certain situations because well, in the end, I'm always gonna get things right in the end. But sometimes you find yourself in the wrong place at the wrong time, and you are going to learn that not every situation is reversible. This is why I specifically avoid some markets, although even if they could still be good markets where to make money consistently on a daily basis. But I'm talking about the exotic currencies. Those are the markets where you can really get burned because political instability, geopolitical situations can ignite movements that are not going to stop in a reasonable time frame. And if you're there exposed, if you're levered on a particular movement, well, that's the way we hurt ourselves as traders. It's a lesson that everybody probably needs to undergo, because there's a lot to be learned from that experience. But well, it would be best to avoid it.
Sure.
Just know, everybody who's listening and probably perhaps starting to trade, you are at the early stages. Well, it's something that could teach us a great deal, but it would be best to avoid it, because many traders do not survive the bad experience. They give up. They start doing something else. And while trading is actually an activity that can set us free, we don't let it enslave us.
You make a good point. So, sometimes if you mentioned when this event happens, it can be the final event for some traders. And I guess because it hasn't been for you, that's because you've used leverage sensibly. You've position sized to a level that that you'll be able to survive to see another day, really. Whereas I think some traders who are early on in their journey maybe tend to over leverage, especially when things are going well for them. And of course, when then events turn against them, that can be catastrophic for the trading account.
Yeah, I've seen this happening fairly recently, because sometimes beginners follow these influencers that show them 100K profits per day on gold, and they assume this is realistic, that can actually be done. Well, I told this younger friend, well, this is the recipe to burn a lot of money. Well, 2 weeks after, he told me, well, I lost 20K. When you're 21, well, losing 20K is not something that necessarily is gonna incent your continuing this activity. And in fact, it's not doing it anymore. It's doing something else.
Okay.
While this could be one of the best jobs in the world, can be done from everywhere, anywhere, at whatever time. Well, it can really be something that sets you free. And it's an activity where you need to be able to do the one thing, make profits consistently, not even huge profits, just making profits consistently, and it can really get your life resolved.
Yeah, some really good points there. Thank you. So just coming back to your strategies then. So from my understanding, you effectively have two types of strategy. The first is trend following, and the second is more contrarian. So, and if I understand what you're saying correctly, when the current range is less than the average, you would therefore sort of go with your trend following, and you try to follow those trends. But when the range becomes in excess of those average values, you then effectively switch your strategy to a contrarian. Have I understood that correctly?
Yes, you can say that. I think for Forex traders, the basis of the research for entry setups is the risk profile of the market. So seeing the New Zealand dollar and the Australian dollar being the strongest currencies, and the yen and the US dollar being the weakest, means that at least in the Forex market, we have a risk on profile. Okay. And so we're going to try and take advantage of the profile of the market, intervening in a trend following manner on those currency pairs that show a balance of power clearly in favor of a speculative currency. And so we can see that New Zealand dollar, US dollar found support last week, closed the week in positive territory, and now it's extending just above the first weekly resistance. So the change of polarity of the weekly resistance is an entry setup for a continuation of the move. From bottom to the current high, the market made 56 pips. I know that on average, the market makes 130 pips per week. So if I enter here at the change of polarity of the resistance, I see that 35, 40 pips have already been made. So my target could be a 100 pips target to the upside. So it would be a 2% if the market is to make its average range. Of course, I'm going to monitor, I'm going to verify whether or not there are significant price structures in the way where I could start taking profits. So for example, an entry here on New Zealand dollar, US dollar would have an interesting target at the 1.5% weekly mark, because there's a swing point that could create problems going higher. So this could be a good level to place a take profit order, or where to split the position and maybe leave run until the market reaches its average range. And then if the market overshoots the average range after breaking, for example, breaking out this swing point, well, at that point, I'm going to look at the end of the week for a contrarian entry after the excess presented itself.
Okay.
So this is a system for the swing trader, basically. A trader that believes the market is not going to do, not going to move in one direction forever. Yeah. So it's best to split up your operations. I mean, why do you have to simply buy and hold, or sell and remain in position, when you can expect that there are clear checkpoints where the market is going to react? Yeah. And this is best shown, for example, with the other operational grid that I use. If you want me to show it to you.
Sure. Yes, please.
Okay. Well, let's take this one, because the indicator is the target geometry, and this can also be set up for on different time frames. So we start from the daily grid to the annual. So the system lays out the operational grid as soon as the period open. I believe this is a monthly grid. And so at the end of at the beginning of the month, we already had the entire operational grid, which is made of a starting range, which is from target 1 to target 1. Inside this area, the market is neutral. Okay. But if it changes the polarity of the resistance, we go long, aiming for target 4. If it changes the polarity of the support, we go short, aiming for target 4. This is the first one. Then we go by multiples: 4, 8, 12, 16, etc. Of course, the checkpoints are also good places where you can try a contrarian entry. So target 4 here is good for a long position. Target 4 on the upside, on the long part of the grid, is a good place to try a contrarian operation. And then there are also various setups that can be taken on the inside the extremes of the starting range. So for example, the market here was going up at the beginning of the new month, made a new high, but respected the resistance. Higher prices were rejected, and so the setup based on the system would have been a short position from here to here. And this is where what I was talking about comes into play. Okay, Canadian dollar yen is starting to go down, but the setup is from the upper end of the range to the lower end. We don't know if the market is going to react from support, and maybe we're going to find it up here in a matter of days. So this is the first trade, and you book 140 pips, just about. And then if the market changes the polarity of the support, then you open a second short position, aiming for the following the successive targets. Why remain in position when you don't really know what's going to happen inside the support, which is also in confluence with a previous price structure, a price area that was clearly bought. And so having an operational grid is very important, I would say, whether it's percentage levels or Fibonacci levels, whatever the levels. Having an operational grid is very important, and using it mechanically is also particularly useful, I would say. Because you have to react to certain market conditions on relevant areas, is what I would say. You don't just, the market is up here, it's probably going down. Well, let's see. I open the short position and let's see what happens. Being methodical and respecting your trading systems in accordance with the operational grids allows you to take profit frequently, and that's what makes a profitable trader.
So let's say that the price broke out above this, I think you call it a no trade zone there. So if it had broken out and let's say it went to the fourth target, at this point went contrarian and you opened a long position, what rules would you use to determine where your take profit would be on a trade like that? Would it be the second target that we see there?
Yeah, well, that depends on the time horizon of the grid, because the lower the time horizon, the easier is a retest of the broken support.
Okay.
Because from target on a monthly grid, this is 150 pips. So if the market started going down, well, you're not going to necessarily see a rebound of 150 pips. If this was the weekly grid, I would probably aim for a retest of the support, of what we could call the short entry area, because this is the area that has to change polarity. So I can maybe make a little drawing if you like. So this is the short entry setup, and here we would try to buy the market for the pullback. This would be the setup, okay? But if the operational grid is so I would say from the monthly and going higher, well, I would probably aim for target 2, as you said.
Okay. Yes, that's been really interesting. Thank you for sharing that. I want to move on now, and really, if your journey's been anything like mine, there have been moments where you've had these eureka moments, if you like, where all of a sudden something's slotted into place and something's made a lot more sense, and it's had a big impact on the way that you either understand the financial markets or the way that you trade them. What would you say that those eureka moments have been for you?
Well, I think my eureka moment came when I finished setting up my trading system. I had monitored my operational grids for basically years, for months on end, every day. And I saw that the market would consistently react to certain percentage levels and to certain Fibonacci levels. And then I combined that information with the average ranges, because we had this indicator that could show the average ranges, but it was programmed for to relay a different indication. But I asked the program, is this what the indicator is telling me? I mean, if I put in such and such values, is this going to tell me what's the average range on a daily, weekly, and monthly basis of the instrument? Yes, exactly. And so I started combining the reactive levels that I already had with the information coming from the average ranges, and I discovered that every time currency pairs would produce an excess and start losing momentum around my significant levels, a retracement would systematically occur.
Right.
That's when I said to myself, well, you can do this every day for the rest of your life.
Okay, that's really insightful. Thank you for that.
Yes.
So I'm going to start to round things up then now, and just ask you a question that intrigues me. What is it that you think distinguishes successful traders from other traders?
Well, I would say first and foremost, drive. I mean, you need to want to do this thing. You have to wake up every morning and chase after your setups. I mean, this is not something that can be done 1 hour a day, a couple of hours a day. It takes a lot of dedication. Before you put yourself in a position to be profitable, and then after, because there's a process that that we have to undergo. We have to study a lot, set up our trading system. It has to be sound, and then we have to be capable of applying the system consistently. And it's easier said than done. I mean, there's a lot of people that do not want to study. They want somebody to give them something ready to use. Yeah, you do this, this, and that, you're going to become rich. That rarely happens. So you have to study a lot and do a lot, and accumulate a lot of experience, because probably the best asset you have in this sector is experience, direct experience of how the market behave, and the various situations in which you can find yourself.
Yes.
So dedication in the beginning, and then consistency, and of course drive, because the market is not going to wait for you. You have to decide what you want to take out of the market. I think that is conceptually very important, and it goes back to what I was mentioning earlier. I mean, you cannot wait for the market to pay you or make you rich. You have to decide what you want what you want to take out of the market, from the market. Okay, and this is how I became a trader. At some point, I decided, well, I want this from the market, and I'm gonna go out there and take it if I can. Okay,
No.
and that was the turning point.
Excellent. Okay, thank you. And so the final question now is really about the future for you and what your plans are for the future. For example, improvements that you intend to make on your strategy. I think you mentioned one of those briefly earlier on. Is there anything else fundamental that's going to change in the future, or pretty much is it small incremental changes that you see yourself making?
Well, speaking of the future, I think my main responsibility is to become better and better at making the investors feel safe. And so I mentioned earlier on that my current positions are the types of position I wouldn't bother to have a look at if it was my account. But I understand that when people invest their money, first and foremost, they wanna feel like their capital is safe. And so if a drawdown of 6, 7, 8% is absolutely acceptable for me, that's not necessarily acceptable for an investor. And so me and my partner are going to strive to minimize the drawdown as much as we can in order for our investors to feel to feel safe and perceive like their capital is protected. I mean, I'm not worried, but I put myself in the position of the investor, and he might be worried, and I don't want that, because that doesn't make me feel good.
You make a very valid point, because you as a trader, you know what's going on behind the scenes, and you might have complete confidence that the drawdown will end and you'll start to make new highs. But an investor doesn't really have that same insight that you have. And so you're absolutely right. Investors can feel that they don't know, is this the end? Is it going to carry on going down, and so on. So it's a really valid point you make. Thank you.
Yeah, that's absolutely my main me and my partner's main goal, because this is our main responsibility. I understand, because you can do whatever you want with your own money, and everybody has a different risk tolerance. I have to assume that our investors, do not have my same the same risk tolerance that I have, and they're not following the positions. They don't know what's going on, and so the best way that I can make them feel safe is to show them that contained number, that contained drawdown that never exceeds X.
Right, perfect. Thank you ever so much for your time today, Fabrizio. It's been really valuable for me, and I'm hoping that the viewers have found it as valuable. I'm sure that they have. If anyone wants to contact you, if they have any further questions, are you okay for that to happen?
Absolutely. They can contact me on LinkedIn. Okay. They will find me as Fabrizio Alessandro.
That's brilliant. All right. And I'll maybe put a link in the description of the video as well if they want to follow that.
Thanks a lot, Martin.
Okay. Well, thank you ever so much for your time. Okay. Bye for now.
Thank you. Bye.